And the NASDAQ is trying to go the opposite direction here. A little bit of a different look. First objectives on the S&P filled and taken out. Continuation targets are a little bit wider. And also with this drive down, the NASDAQ is setting up potential interest for the short side. So we've got a little bit of a both sides of the fence going on here. They filled the scalp again. Can they get through this time? The NASDAQ's going to move too much for me to do limit orders. The S&P is at least slow enough. And just because I know how that's going to work if I do that, let's just use the MIT and just get it over with now. Just picking off those little scalps that the S&P is offering up, but it's not breaking away from the scalp area. So I'll just keep taking the scalps, I guess. Got 2-ish minutes until this candle's done. The way this candle closes is going to be super telling. The NASDAQ for the shorts, at least on a continuation phase, would be in like the 72s, but the S&P is long and working very nicely to the upside. So this little breakdown in the NASDAQ, I think, is more just kind of challenging these major POCs from the previous and seeing, hey, are you guys actually still here or what are you doing? Their response is going to be pretty important here. See what they want to do around the 70s for the NASDAQ. That's the area where the sellers, if they're going to try to take it, that's the spot. They went up to 65. Okay. They got 30 seconds left on this candle on the S&P, and this candle's looking mighty bullish, even though it's a bear bar. We'll see what they're able to finish off, but sheesh. More continuation up. They're trying to get it going. Very bullish bear bar, if that makes sense. Crude oil breaking away through the highs. Come on, ES. You got 5150, the previous POC. You've got settlement, the major swing up there. Everything is up there. I think limit orders are going to be too much management right now. First zone of interest is then going to be breaking back above the 35s and attempting to continue back up towards the 42s as the area of interest. But if they start breaking through the 30s by much, that could definitely cause some issues. The NASDAQ still continuing to the downside. The POC is on the chart. It's just further back. Sorry, it's out of zoom. it's there. It's just I zoomed in a little closer. The POC is back in 19s. Does the S&P have a truckload of orders sitting on 30, or what's going on here? Sheesh. Yeah, if you were to look at the near, like the super near term, the developing one is currently at like the 34 area. S&P does actually finally crack through the little 30 area, right on top of that previous major swing. The NASDAQ still getting clubbed to the downside. I still like the prospect of the S&P for the long, but it did pull back a little bit deeper. Seems like they want to try to trap some of these inside swings. The S&P still has all the support. It makes sense why the NASDAQ's falling apart. It lost all of its support. Can you explain? Oh, yeah, definitely. Yeah, in training. Sure. No problemo. Man, crude oil is just screaming right now. NASDAQ, honestly, this move down, given the fact that the S&P is still staying healthily propped up, seems like a lot of traders got stuck and they're looking for a re-entry down in the low 60s. For longs, like from, excuse me, from like a swing perspective, major swing perspective, that spot seems like a real big real big zone of interest. The shorts still have a bit more room if they can back up. Let's see. Market's still hovering. Gold having a bit of a corrective phase back towards the same zone of resistance. That's right around like the 53.9 area. I know how this market's been today. Play it smart. NASDAQ still getting pushed down to the lows, and that zone of support a little bit further down, 560s, 540s. That's for the longer term swing. Crude oil's gunning for 100. Jeez. Okay. Didn't want to give me that one, huh? All right. Now, what would be really optimal from like a patterning perspective, because again, the market's still migrating its way down on the NASDAQ very firmly, not even new highs, nothing. If the longs were going to try to come in, which again, every assumption is that it's going to be low probability anyway. But if it does come into that area, I mean, being the first one of the party is going to be tough. You might be a lot better served to look for something along those lines, or like a pattern or some kind of consolidation or something to happen first, just because the NASDAQ doesn't have any of the support. Like the S&P it's already gotten its support. It's gotten everything it needed to do. Jeez, oh Pete, crude oil's going crazy. No pullback. Just straight up. Same with the NASDAQ to the downside, just straight down. We'll see what the NASDAQ's able to accomplish, but there has been very, very little corrective phase. And now we're already almost down to that target. I mean, they plot a strong bull bar here, which, keep in mind, it's still like 4 minutes. But a strong bull bar could easily be the reversal candle that those longs are waiting, just the way that this dive down happened. We do have a new low, though, which means that this is all part of the impulse. Also means that as long as you have eyes, you probably realize the PLC is going to be back in all that mess at 700. NASDAQ just kind of chopping around, not really doing much. Getting very close to that support zone just underneath the lows, into the low 60s or high 50s. Man, if this gets much more momentum to the upside here on the S&P, the shorts are going to get clapped. They're going to run into some issues here if they come in too aggressively. They need to push back now off of these 32s if the sellers are going to hold it. I'm giving them pointers. That doesn't help me at all, but sellers do show up off of that area. Not really any sizable pullback at all on the NASDAQ. I will utilize a 1 contract at the least for a hedge to the downside, but primarily just because I've got this extra 1 with the S&P. And if we can get a pulse down to a new low to finish the job, then fine, but it's purely for a hedge. As soon as the S&P is off, the NASDAQ's coming off too, so. Nice pulse down. Again, I'm just utilizing the fact that any short that I take on the NASDAQ is effectively free. So I can kind of be aggressive as I want because that's my hedge position. Got about 5 minutes until we hit top of the hour, waiting for the S&P to roll back up. The NASDAQ's down in its major zone of support. The S&P is just hovering. Hey, Sean, how's it going? And then after we move into training time, I'll also cover that question for you, Vicky. And then we'll any other questions that come in, feel free to get those covered, and we'll rock and roll. Nice little spot to re-add into the into that hedge, and a nice little push for a quick 20. Sure. It's like eating a soup with a fork, hedging. No, not the way that I hedge. You'll notice I'm in, out, in, out, in, out. I'm using this volatility with the understanding that I know that if I end up getting stuck in my position in the NASDAQ, then I'll just hold on to it and exit when I exit my S&P position. But along the way, I'm going to scalp the NASDAQ like it's going out of style because I can. So I'm using it to buffer the difference. So if I end up having to eat a loss or two on a couple contracts for the S&P, I've buffered it with the NASDAQ. Not to mention the extra, what do we have, 3 or 4 scalps on the S&P from earlier. So it's all kind of playing the hedge. Now, if I were to enter and just leave it as is and just close, then yeah, it's like eating soup with a fork. I scalp my hedges though. Of course, if I get filled. Story of my friggin' life. I'm going to reduce one of them on the S&P. And that's actually a perfect example right there. I'm eating one of the losses. Remember, first in, first out. But the majority of that loss has already been easily compensated by the other scalps along the way. I use it as a method of compensation, I guess is the best way to put it. And now this way, so long as I stay in both, I'll just exit them at the same time. So I don't even necessarily have to scalp out of my S&P long now. I'll still, like, my normal position size, I like keeping my average position size around 5 and then scalp the 6th, 7th, whatever, use those as my buffer. But because of how fast the NASDAQ is, this is kind of like this is a pretty close hedge in my opinion. The upside on the S&P is going to be back up. I mean, preferably through 35. Like I said, we don't even necessarily have to take the scalper's objective anymore. I'd like to see them break above that, which is why I'm still monitoring it. But the overall target to the upside is going to be a little bit potentially larger, closer to like I wish the 2-to-1 fit a bit better. It's kind of a bummer, but it still fits inside of the previous the previous major swing in the settlement. It's got a couple things going for it. Hey, Bram, how's it going? All right, here it sits, not really doing much of anything, but getting a little more continuation. 10 o'clock here, right around the corner. I'm going to use this dip back as a way to exit the potential quote unquote hedge on the NASDAQ, because I believe this volume down has got some potential to stick. Yep. Looking into the secondary objective to catch this next rally to the upside. The hedge served its purpose. I don't need it anymore. Let's look for the follow through. Final objectives going to be up in the 42s. Getting a pullback to the break-even point. Buyers attempting to defend it, losing their ground back under. All right, just fill the damn thing. Jeez. All right, I'm out. We slid back down through the break-even point. I don't want it anymore. I tried getting the long. It had its chance to rally back up. I liquidated my hedge. I got rid of all of my protective measures for that. It had to go. It didn't. I don't want it. It worked out in the end. I mean, the hedge and in between everything else, it worked out nicely, but